The aggregate U.S. government debt includes $30 trillion net, trillion, in on-balance sheet obligations, and well over $100 trillion in unfunded obligations, entitlements, $130 trillion. To put that in context, it's more than 4 times gross domestic product. It's 26 times the gross federal budget before they spend a dime. Your audience should read The Triumph of Politics by David Stockman, which details the derailment of the Reagan Revolution in 1980. The most recent Republican budget last week didn't deal with the deficit, never mind the debt at all. Let's put it in context. The aggregate U.S. government debt includes $30 trillion net, trillion, in on-balance sheet obligations, and well over $100 trillion in unfunded obligations, entitlements, $130 trillion. To put that in context, it's more than 4 times gross domestic product. It's 26 times the gross federal budget before they spend a dime. Now, I mean, I think how this ends. Yes, they cut some expenditures, and yes, they rejig entitlements. Old rich folks like me, they take away the cap on Social Security at the same time that they means test our benefit. In other words, they steal our contribution. And they raise the eligibility years. They have to do that. And then they inflate away the net present value of the obligation. In the 1970s, in the United States, we reduced the purchasing power of the US dollar by 75% in 10 years. That's a tax. But you can politically honor the nominal obligation if you inflate away the net present value of the obligation. That's how this ends. People need to understand that. There is no arithmetic alternative. One more time for your audience. There is no arithmetic alternative. It isn't until people do the numbers that they understand the reality of the situation. So I think we paper over the problem for at least 2 years because people don't want to face reality. When people talk about fraud and abuse in government, they're talking about benefits they don't get. The benefits that they get are necessary and needed. The benefits that other people get are fraud and abuse. You can pass this down the road for a while. We did it through the decade of the 50s and 60s. In the decade of the 70s, the war on guns, the war in Vietnam, the guns, and the war on poverty, butter, came home to roost. We lost both, of course. What we were left with was the bill. And in the 70s, we paid the bill by depreciating the value of the US dollar over 10 years by 75%. But the aggregate federal debt is $130 billion. The net trillion, the net revenue, the gross revenue of the US dollar, the government, before they spend a dime, is $5 trillion. You see the problem? The size of the problem is 26 times the size of the solution. You don't solve this on the edge. The difficulty is that the on-balance sheet obligations of the U.S. government increase by $2 trillion a year. In other words, any savings is used up in reducing the deficit. The off-balance sheet liabilities, which are Medicare, Medicaid, Social Security, that increases by another $2.5 trillion a year. The deficit between on-balance sheet and off-balance sheet currently is the same size as gross federal revenues. Let's assume, just for fun, that higher taxes increases the revenue by 50%. I hear what you're saying. The arithmetic means that the deterioration of the purchasing power of the dollar is the only way out. The narrative is unpleasant, particularly for a young person like you. If you're an American, you're going to pay into Social Security, and you're going to pay into Medicare, and you're going to pay into Medicaid. You're going to pay into the federal government pension scheme, whether you're a federal government employee or not. You're just not going to get any benefit from it. We got through the decade of the 70s. We did it by inflating away the net present value of the purchasing power. We did it by reducing American standards of living substantially over the course of the decade. And that's what's going to happen again. In a biblical sense, there needs to be a reckoning. Maybe not as deep a reckoning as there was allegedly in the Bible, but certainly as deep a reckoning as there was in the decade of the 70s. The only answer I see, an old codger like me, I don't know what they pay me. Let's say they pay me $4,000 a month in Social Security. I don't know what they pay me, to be honest with you. They'll continue to pay it. But that $4,000 will buy $700 or $800 worth of goods and services. That's what'll happen.
Yeah.
The tax rate, of course, the nominal taxes will increase as a consequence of inflation. The nominal benefit will stay stable, but the actual benefit will decline substantially.
Yeah.
It's very difficult for me to understand why somebody wouldn't own physical gold.
Yeah.
Because I believe that a replay of the 70s, in a financial sense, is inevitable. You need to look at what worked in the 70s. During the period where the US dollar lost 75% of its purchasing power and other countries did worse, the gold price increased 30-fold.
Yeah.
Now, will it increase 30-fold this time? Unlikely, because it's going from a higher base.
Yeah.
But gold has done well during periods of time when faith in fiat currencies has been shaken. And I think it will be, because of the arithmetic, shaken. So to start with, everybody needs to save something in gold. I'm not saying abandon the US dollar or the British pound. Maintain liquidity in the currencies that you spend, but maintain your savings in gold. If you are willing to do some work, if you have the psychological constitution to tolerate volatility and risk, then invest in the gold stocks, and if you have money left over, speculate in the juniors. Those are three different businesses. Savings, that's gold. Investing, that's the big gold stocks. Speculating, that's the gold juniors. They're three different businesses.
Yeah.
Everybody should be in the first business. Everybody should save in gold. People who are willing to do some work and take some risk and endure some volatility should invest in the biggest and the best gold producers.
Yeah.
People who are willing to do a lot of work, who want to outperform the market, who are seeking alpha, can speculate in the juniors, but they need to decide what bucket they're in and for how much. I would be delighted to be wrong.
Yeah.
When people say to me, Rick, when is the gold price finally going to move? I scratch my chin sagely, and I say 2000. Yeah. In the year 2000, gold was $250 an ounce. Now it's $28.50. Gold is up 7-fold in 24 years. It's gained 8% compounded. Gold has done its job for 25 years.
Yeah.
People, of course, are saying, when is gold going to double? I don't know. I don't care.
Yeah.
That isn't the purpose of savings. The purpose of savings is to maintain your family's purchasing power over time.
No, I agree.
And gold has done a spectacular job of that. And it's done a spectacular job of that for 25 years. I know what I'm doing in the junior space, so I can afford to speculate. I've told people for years, own the number of juniors that corresponds with the number of hours per month you're willing to spend studying your portfolio.
Yeah, that's a really good point. Yeah.
If you're willing to spend 10 hours a month reading 10Ks and 10Qs, quarterlies, insider filings, then you can own 10 juniors.
Yeah.
Many speculators own 60 juniors and spend 0 hours per month. That's wrong. In terms of my own portfolio, I'm way too long cash. I have way too much liquidity.
Okay.
Most people don't have enough liquidity. I have way too much. I have been, I would suggest, opportunity constrained. I built up a passive real estate portfolio for many years. When I got the sense that the interest rates were going to rise, and I didn't know much about real estate, I'd been very lucky, I sold it. And the consequence is I haven't been able to redeploy that money. So personally, I'm extraordinarily liquid because I've been more opportunity constrained than I would have liked.